Do you really ask the question that can you really make money from the crypto market? Or you fall into that criteria where you say it's completely rigged, you cannot make it? In any case, you should see that market gives you opportunities if you understand what's happening. Now, if you are serious about making money from this market, next 10 minutes is really for you. I'm going to try and break things down to make it so easy for people who are even beginners to understand what's happening in the market and how you can take benefit of that, how you can make that happen in your portfolio. And it won't happen in a day. You will watch your portfolio growing over the next few weeks. And if that's you, smash the like button and let's get started. Welcome to the Scientific Investor family, where the normal retail guys get to learn how to become the next top 10% of this world. We've been going through a lot of these assets using Ask for TA, and I gave you guys my thoughts. This is like, a month back. This asset popped, it ran through the target one, and then what happens? Drops. Boom. So some people take profit at that target one, you slows down because the gap between that target and the next one was wild. So people went ahead taking profits, and that's why the market started dropping. Then we had the thought process like this. Bitcoin should come back to retest this range. And when that happens, if it's breaking to the downside, we were ready with the dry powder. As I've talked about this, we were like 40% in dry powder. We are slowly getting into the market, doubling down in different assets. Now, why is that? On what basis am I doing that? I'm going to break that down here easy and then take that idea, the same idea, into XRP so you guys know what's happening, exactly what's happening in this asset too. In general, I'm going to use Ether as the altcoin segment's write-off. What you're watching here is the fact that, okay, each time the price drops, yeah, there is some level of panic in the market for sure. I'm not saying it's bad to have that. I'm saying it's normal. You have to overcome that. First thing in understanding what is happening in the market is the price structure. In easy terms, to put that like this, it's which direction the price is moving. So you have the 1, 2, 3 on a micro leg, and then you have the 1, 2, 3 on the macro leg, right? So it's going up, it's going to come back down, it's going to go up, it's going to do all those. And while the price is doing that kind of move, you'll still see the 1, the 2, the 3 inside that. So you need to know where you are with respect to the macro direction. Now, if that seems complicated for you, forget that. Just look at this. The direction of this market is to the upside, which is the mean or median line which you can plot in this market, which goes like this. Sometimes the market play a little bit above that, sometimes it's a little bit below that, but you kind of get the idea which direction it's going. It usually plays out like this. Great, so you now have a direction. How can you take advantage of that, right? You want to get positioned well enough in the market. So on a 3-day or a weekly chart, which is a macro chart, you need to first identify the direction which you are traveling. That's easy. If you've been getting these level as a resistance and then you're breaking through, now that's a breakout. You're going to go to the upside and that's your new trend. Or if you are the easiest guy to look at this, it's like, okay, the price is consistently putting in higher lows. The trend is to the upside. Fine. So if the trend is to the upside, where should you buy in? If you're a micro trader, you can enter the breakout, accumulate there and ride it to the upside. But for most of us, the easiest way is that if this is the trend in which it is going, each time it drops, you can use it. How? This is the direction on a weekly. Now you go to a 4-hour or a daily, and each time when there is a pullback, if you do look at that, you kind of get an average movement, 15% down. Great. The next time, 20% down. Perfect. The next time, 25%. So you have the 1, the 2, and the 3, and you have all these corrections happening. Fine. Now you go on the next level, and you're literally watching the price dropped here, 21%. If you panicked and moved out, you are kicked out. Whereas if you bought in at that previous level of support, you made it because that was the average move in the market. Right now in this particular asset, it's like 16-17%. It's getting close to the average. If you're trying to time the market to the perfection, now that's super hard, but you can look for at least the average move in the market. If not, and you're like, okay, fine, I'm not going like 10x, 20x, 100x levered, so it's okay. I would agree. Because what's happening is that your macro direction is to the upside, and while the price does this, you're buying here. So you're using short-term correction to position yourself for the macro run up. So the macro direction is still to the upside. Within that, you have this micro drops. So you're utilizing this micro drops to get into the next impulse, whether it's here in an asset, whether it's here in an asset. But you have to identify the key element. Are you here or are you here? Like if that's the area, it's okay. This drop, you literally position yourself and get advantage of this run. But if you are completed this phase and you're going down this, now, yeah, you need some patience. How do you identify those? That's exactly what I'm trying to do with this. You have the microstructure, the 1, the 2, and the 3. Okay, fine. So your macro 1 is completed. Now when you go down, it's the A, B, C, which is painful. So you literally have to wait for that. Now, if you don't understand the price structure, leave it. Look at what the price has done through that ABC. So on average, if the altcoin market is dropping 30% and you're buying it, you're more or less close to the bottom. Not the absolute bottom, for sure, but you kind of get into a position where you're really safe. Come back to XRP. This is the micro trend which you are looking at. This is okay. You are literally watching that the asset is doing the 1, the 2, the 3 short-term move. And what happened last time after you completed this 1, 2, 3 move, 1, 2, 3, you came back down to the support level of the 2. On XRP, that means this is your 1, this is your 2. The support level for 2 is here. You're not absolutely at that range, but you can argue that you're getting so close. Now, if you're someone who's trying to time the market to the perfection, which is, like so crazy hard, you can wait for the bottom. If not, what the normal guys would do is like, okay, I want to get an advantage in this market. I'm going to use this 20% drop. That's like the average drop in this asset. Like 18-20%, that's the average. Those who bought into these corrections last time, or at least average down into them, they get to make the real ride. They ride it to the upside. They get the benefit of the impulse on the macro direction. What do I mean? And if the macro chart is suggesting you that this asset is riding, most likely this is what you are anticipating. And when you buy into the 1, 2, 3 leg and you're like, okay, the 1, 2, 3 itself is trending higher, that's good. The next leg is this. You're going to sell, if you're a trader, close to those targets. That's fine. Now, how do you identify when it's about to move up, or at least mentally prepare for these? Say earlier today when I was talking about this correction, pointing you guys towards, okay, there is another drop coming. And how can you take benefit of that, right? That was our thought process here. That was a 4-hour chart. This is the trend line. This is the support. We were looking for that drop to the trend line. So I was just literally placing a parallel line for this trend line resistance. So here at the bottom, you had a support, So I was expecting it to do something like this. Fine. If the price is dropping, let's see where it actually comes. Because in between that, you had a support range, which was obliterated. And below that, you had another one, which was like a key range. Now, if you are again trying to look for the perfection, it's going to be so hard in this market, which is highly manipulated. The way you have to think about it is the way the whales would think about liquidating retail. What would they do to kick the retail out? That's how you have to think. Now, the crazy part here is that the average drop in Bitcoin is not this. We have only dropped like 12%. At this point of time, the price has only dropped like 12%. We know that the average of this asset is like 21% drop. So if it's 20 or 21%, right now you still have more to come. But if we anticipate that, most likely what happens, these guys actually drop like this and they push it to the upside saying, we're going to the sky. And then what happens? They crash it that 20-21% from that tier. That's one of the reasons why I'm saying I'm not defensive here. I'm defensively aggressive. I haven't gone completely defensive because the market shows me that there are some things evolving. Agreed. On our daily chart, this idea which we talked about is now the reality. If you knew that, you were prepared. Now, on that front, you also have the negative divergence which we talked about. It's still playing out. It's great. But the moment you start zooming out on a 3-day, yes, you still have the negative divergence which we talked about, saying that's a higher probability. Now that's the reality. So when I say that's the reality, that's already printed in the price action. What's next? You're zooming out to a higher time horizon. You want to see now, even with the candle close, what would be the price action here? Barely, you don't have a confirmed it. The price have not confirmed that movement yet. So what we should be thinking about is like, okay, we had these kind of moves here. We had these kind of moves here. It can again be a trap. The amount of institutional interest, financial institutions involved in this run-up is super crazy. And even with all of this craziness happening in the market, remember, last all-time highs were in this range. Right now, you're still above that leg. If you place it crystal, this is that range. The price is still staying at that top. So you're not bearish here. You can think about a corrective leg where you are, if you decide to trade this asset, you're trying to position yourself just like we talked about here. The macro trend is still to the upside. Any micro drop, which is at least close to the average drop, you are trying to use that for your advantage. You try to get position. Now, what would that look like for Bitcoin? That's somewhat lower. If it's like, okay, the absolute textbook 20%, which we have seen here, close to $57,000, $58,000, great, cool. If you're a bull, you're looking for that. But on the monthly, you're still at 75. I'm like, okay, the 80-85 range is what I'm looking at for Bitcoin to top off. Maybe it's at $75,000. Maybe it's at $78,000. I don't know. But what I'm looking at is that the market is going to play some drama here and then push back higher. I don't know where exactly this is going to happen. But what I do know is that the price is right now showing you something. What is it? This low to this low. What's that? It's going up. Whereas at the same time, this low to this low is dropping in the RSI. That's hidden bullish divergence. Last time this happened, you know what the price really did. If you don't, let's come back here, revise what happened in here where people were calling for the downside, literally to the $20,000, $25,000. We argued it's going to go up. Why? The same exact reason. So when the price action is showing you something clear, crystal, you should not go against it. Now, if you think that's a micro pattern, I would argue no. Even if you go on a weekly chart on Bitcoin, this was that thought process which I shared back then. You can go back. It's YouTube, right? Everything is recorded. The price is not dropping, but the RSI is dropping. Hidden bullish divergence. We should go up. Now, with time Time proved that we were right. Our thought process was aligned correctly. If that's the same theme which we are looking at, right now, yes, to the upside, we are starting to get a divergence. The RSI is not as high as the price, which means there should be some corrective leg. I was saying this at 73, 74,000. Now we are at 64, 65 range. Perfect. How low can this go? That's what we are trying to look for. How's the altcoin market reacting to that? It is still trending to the downside. Dominance is trending to the downside, which is cool, which is fine. And then you slowly step back into a macro chart on the same asset and you're like, whoa, wait a second. It's trying to make a double bottom here. Can it bounce back up? Or is it going to be that rectangular pattern in a trend, which is a continuation one, right? So you need the breakout from this range to understand that. But right now in the market, look at which assets you are in, what they are doing against Bitcoin, what they are doing against dollar, and how much they have already corrected. What's the average correction in that asset? Use it to your advantage. This is where you get to make profits. So guys, if you received value, smash that like button. And if you want these kind of updates, to be prepared to take the dry powder to buy back those assets when they are down, you can look at the SI family. The link is given in the description in YouTube or on the bio in Twitter. I'll meet you guys on next video. Bye for now.